In 2025, gold prices in the United States have seen an extraordinary surge. Spot gold climbed all the way to $3,653 per ounce by September, marking an impressive 39% jump within a single year. This massive rally was fueled by expectations of Federal Reserve interest rate cuts, a weaker US dollar, and ongoing central bank buying across the world. And with global economic uncertainties rising, investors rushed toward gold as a safe haven asset. Analysts at ANZ Group even predict gold could hit $3,800 by the end of 2025 and potentially break $4,000 in the first half of 2026. Compared to gold, the stock market's performance looks modest. The US 500 index reached 6,853 points in December 2025, showing a 1.21% gain for the month and 12.6% over the year. But gold outperformed everything, rising nearly 60% in 2025, while the S&P 500 gained only about 16%. This caused the gold to S&P ratio to tighten sharply, signaling growing market caution. Over the past 20 years, gold has actually outperformed the S&P 500 by a narrow margin, 543% versus 482%, especially during periods of crisis. In December 2025, US stocks also showed strength. The Dow Jones jumped 408 points, up 0.9%. The Russell 2000 gained 1.9%, supported by expectations of lower borrowing costs. The Nasdaq rose slightly by 0.2%, with tech stocks facing mild pressure. Still, overall market valuations remain attractive. Historically, gold has outperformed the S&P 500 23 times in the past 53 years, especially during bear markets. Central banks continue to boost demand by aggressively stockpiling gold. Meanwhile, major banks like Goldman Sachs see gold reaching $4,000 by mid-2026 and possibly $5,000 if private investment picks up. More conservative forecasts from HSBC and Citi point toward a range between $2,500 and $3,125. These trends are forcing investors to reconsider their gold-to-stocks balance. From a technical standpoint, gold prices remain above key support at 1.8 and 50ers, with resistance forming near $2,000, signaling a possible breakout in the coming weeks. RSI and MACD indicators continue to support a midterm bullish trend. US stocks also show solid technical strength, with the S&P 500 holding above the 6,800 to 7,000 support zone. Volatility has eased in the Dow and Nasdaq, reflecting improved market stability following recent Fed policy announcements. Investors are now focused on the upcoming Federal Reserve meeting, which may set the direction for both gold and equities. On the economic front, US GDP growth is trending toward 2.5% in the second half of 2025, providing a supportive backdrop for equities. Inflation remains around 3%, but is expected to cool further next year with Fed guidance. This creates a mixed yet opportunity-rich environment, where gold's safety and stocks' growth potential both demand careful consideration. Gold demand in the US has risen sharply, helped by a weakening dollar, a trend that typically boosts gold prices. Meanwhile, tech and financial sectors continue leading the stock market, though global uncertainties may still shift sector performance. In conclusion, the 2025 landscape for gold and US stocks presents both opportunities and risks. Investors now look toward technical indicators, economic data, and Federal Reserve policy to build a balanced and resilient portfolio for 2026. As 2025 comes to an end, both gold and the US stock market are showing strong but very different investment trends. Gold has become a major choice for hedging and portfolio diversification, especially for investors looking to protect themselves from inflation and economic uncertainty. Central banks around the world continue to buy gold aggressively, strengthening its position as a reliable, long-term safe haven asset. Meanwhile, opportunities in the stock market are emerging most strongly in technology, consumer discretionary, and healthcare sectors. Fund managers, confident about America's economic recovery, are willing to take on higher risk positions, but still choose to keep gold in their portfolios to guard against sudden market volatility. This approach shows that investors want a balanced strategy between gold and stocks moving into 2026. Major financial institutions expect gold prices to potentially break $4,000 per ounce in 2026, especially if global uncertainties continue. Firms like JP Morgan Research see gold as an attractive return-generating asset, and the overall mood on Wall Street remains cautious but optimistic. Experts recommend that investors build a long-term position in gold while using stocks for short-term and medium-term gains. Such a strategy helps protect against economic swings while still capturing growth. Understanding both the rising U.S. technology sector and gold's price stability is essential for making smart decisions in a shifting market environment. It's also critical to keep an eye on U.S. economic policies, Federal Reserve interest rate decisions, and global macroeconomic indicators, all of which will determine the direction of both gold and stocks. In the 2025-26 cycle, a balanced gold stock investment mix remains the smartest approach. Latest gold futures update, December 2025. Gold futures are trading at $4,229.9 per ounce, just slightly lower than the previous close of $4,232.05. The day's low hit $4,023.3, while the high reached $4,246.9. Trading volume stands at 59,839 contracts, well below the average of 185,247, indicating lighter activity. The technical picture remains bullish, with 50-day moving average $4,095, 200-day moving average $3,531. Both moving averages continue to support a strong long-term uptrend. In comparison, the S&P 500 gained 12.60% over the year, but gold surged more than 60% in 2025, clearly outperforming stocks. Gold also recorded an impressive yearly high of $4,398, bouncing from a low of $2,596.7, attracting heavy demand as the dollar weakened and markets anticipated Fed rate cuts. Stocks such as the Nasdaq and Dow showed stability, but gold's safe haven appeal remains dominant, especially for risk-averse investors. Over the past 20 years, gold has outperformed the S&P 500 with 543% versus 482% total returns, particularly during crisis periods. U.S. investors continue increasing their holdings in gold ETFs, while tech and small-cap stocks lead equity performance. Tashed outlook for 2026. Current trends suggest gold could reach $4,500 next year, especially if central banks continue large-scale buying. Traders should watch the U.S. dollar index, global tensions, and upcoming Federal Reserve meetings. For stocks, GDP growth, earnings trends, and sector rotation, especially in tech and small caps, will shape performance. Most analysts recommend keeping 10 to 20% of the portfolio in gold for balance and stability, while allocating the rest into growth-focused U.S. stocks. In December 2025, gold futures, GCUSD, are trading around $4,229.3 per ounce, showing a slight decline of 3.2 or 0.08% from the previous close at $4,232.5. The day's range has been wide, from a low of $4,203.3 to a high of $4,246.9. Trading volume stands at 60,524 contracts, noticeably below the average volume of 185,247, indicating a lighter trading session. Technically, gold remains in a strong uptrend. The 50-day moving average at $4,095 and the 200-day average at $3,531 continue to confirm long-term bullish momentum. These signals reinforce gold's safe haven status at a time when many investors are looking for stability. In comparison, the U.S. stock market has also performed well this year. The S&P 500 is up 12.60% year-to-date, while gold has delivered an exceptional 60-cent-plus return, significantly outperforming equities. Gold reached a yearly high of $4,398, bouncing back sharply from a low of $2,596.7, fueled by expectations of Federal Reserve rate cuts and rising global uncertainty. On the stock side, small-cap indexes like the Russell 2000 gained 1.9%, while sectors such as technology and healthcare continue to lead market performance. Even with this strength, gold's lower volatility and strong price action are proving to be more attractive for risk-managed portfolios. Over the past 20 years, gold has outperformed the S&P 500 with total returns of 543% versus 482%, especially during uncertain economic periods. U.S. investors continue increasing their positions in gold ETFs, while equities remain supported by sectoral gains in tech, healthcare, and small caps. Looking ahead to 2026, analysts expect gold prices to potentially rise toward $4,500, provided central bank demand remains strong. For traders, key focus areas include gold's open and close levels around $4,234.05 and overall market direction driven by global risk sentiment. For stocks, GDP growth, earnings data, and sector rotation trends will continue to influence performance. Global inflation trends, dollar strength, and upcoming Federal Reserve decisions will impact both markets heavily. By maintaining a balanced allocation between gold and stocks, investors can protect their portfolios while capturing growth opportunities. December 2025 clearly shows how important it is to analyze both asset classes, gold for stability and equities for upside potential. And with new market data constantly shaping trends, staying informed is the best way to make smarter investment decisions. So friends, that's the latest update on December 2025 gold futures and the US stock market. We'll see you again in another informative and powerful video. Until then, stay positive, stay confident, and keep watching Gold Stock.